Good evening, and welcome to AJP's closing brief. Oil, geopolitics, and AI collided across Northeast Asia today. Renewed tensions around the Strait of Hormuz sent investors fleeing risk assets, while another wave of selling in semiconductor stocks dragged regional markets sharply lower. Asian markets ended broadly lower as investors reacted to two global shocks at once. Renewed military tensions involving Iran and the Strait of Hormuz pushed oil prices higher and revived inflation concerns, while a fresh round of profit-taking in AI-related semiconductor stocks deepened the sell-off across the region. South Korea suffered the biggest losses. The KOSPI plunged 5.07% to 7,268.20 after both the KOSPI and KOSDAQ triggered sell-side sidecars during afternoon trading as program selling accelerated. Japan's Nikkei fell 1.67% to 67,116, pressured again by heavyweight semiconductor shares. Shanghai proved far more resilient. The Shanghai Composite slipped just 0.03% to 3,989.22, staying just below the 4,000 mark as defensive sectors cushioned broader weakness. The sell-off spread well beyond chip makers, but semiconductors remained at the center of the storm. Samsung Electronics fell 5.74% to 279,001, while SK Hynix dropped 5.22% to 2,086,001. Samsung Electromechanics led losses among major technology names, tumbling more than 10% to 1,479,001. As selling intensified, both Korea's main and junior markets activated sell-side sidecars in the afternoon, temporarily halting program sell orders for 5 minutes to slow the pace of declines. The trigger reflected a rapid deterioration in futures markets rather than a company-specific shock. Market sentiment was hit by rising geopolitical risks surrounding the Strait of Hormuz, while investors also continued rotating away from AI semiconductor leaders after recent strong gains. The combination left Korean equities among the weakest performers in Asia. China once again demonstrated the benefits of a more defensive market composition. Although the Shanghai Composite finished slightly lower, the decline was limited to just 0.03%. The day's leadership also highlighted where investors sought safety. Coal producer China Shenhua rose 1.15% to 42.24 yuan, while liquor giant Kweichow Mutai gained 0.6% to 1,195.97 yuan. Pharmaceutical heavyweight Jiangsu Hengrui Pharmaceuticals slipped 1% to 59.1 yuan after recent gains, but remained one of the market's key defensive names. Unlike Korea and Japan, China's heavyweight technology exposure is smaller, allowing traditional defensive sectors such as energy, healthcare, and consumer staples to cushion the broader market. Japanese equities also came under pressure as investors continued reducing exposure to AI-related semiconductor stocks. Advantest, a key supplier to the AI chip industry, fell 3.91% to 27,770 yen. Tokyo Electron lost 2.62% to 67,650 yen. While fast retailing, the Nikkei's largest index contributor, slipped 0.25% to 87,680 yen. The Nikkei closed down 1.67% at 67,116, extending recent weakness in technology shares. While today's losses were smaller than those seen in Seoul, the pattern was familiar. Investors continued trimming positions in high-valuation semiconductor stocks as geopolitical uncertainty and higher oil prices reduced appetite for risk. Today's trading reminded investors that global markets remain vulnerable to both geopolitics and positioning. Rising tensions in the Middle East reignited concerns over inflation and energy prices, while the AI trade continued to lose momentum as investors locked in profits after months of strong gains. Whether today's sell-off proves to be a temporary risk-off episode or the start of a broader correction will likely depend on developments in both oil markets and the semiconductor sector. We'll continue tracking whether risk appetite returns to Asian markets and whether semiconductor shares can stabilize in tomorrow's closing brief. Thank you for watching AJP.